Hey guys, what's up? This is Andrew for TRENDLINES.com. So in this video, I'm here to make a big update on what is happening right now on AMC and GME. So let's get into it. Alright, so as usual, we're gonna start on the daily time frame. I'm gonna go through the price action of AMC and GME because a lot of you asked me, instead of doing live, can you please make a normal video? So here I am. I will once again give you the different scenarios. I will try to tell you what can happen in this market, what trades are possibly good to do to maximize the profits if the squeeze happens. So let's start right now. First, the price action. So as you know, we are moving strongly higher, so that's very good. And the question we're having is how can this move develop? How high can it go? Are there any potential levels where we could see the price action coming back in the coming days to buy more shares or maybe options? So this is what I want to discuss. So the first thing is that today we have the first day. Okay, no, so let me just remind you guys a little bit the bigger picture. So the bigger picture is that we had a breakout above the 17.5 level. Okay, this breakout was here, occurred with volume. Okay, bam bam bam. It occurred with volume, and it happened after small consolidation. So this is a good situation to buy. The next day I was live on Discord. I was live on YouTube, sorry, and I also shared with you buying order at 18.7. I think that has been executed. Since then, I'm a bit quiet in my Discord, and I didn't buy more shares in my lives just because I couldn't. I was trying to get some shares on a pullback, and we were close, but I didn't get more shares. Of course, I would like to get more shares. So I will tell you guys here what levels we can see and how this price action could develop in the coming days. So right now we developed doing a 1, 2, 3, 4, 5. Okay, so this is what we're looking for in a strong move up. All right, we're looking for an impulse. An impulse is always happening in 5 waves. So this is what happened here. Usually the third wave is the most impulsive one and the strongest one. Sometimes it is the fifth. So here the fifth wave was absolutely massive. I think that right now this first wave is complete. Okay, so we have reached, I had 26 or 32, 33 as a target. We went through 26 very easily with high volume. So this is a strong victory of bulls, and we got rejected today at the 33 level, roughly, where we had some resistance and the 200-day moving average. It has created a doji candle, so a long-legged doji candle, which means that this is a doji candle, guys. So this candle is considered as a reversal candle, which doesn't mean that each time you see it there's going to be a reversal. It just means that for the first time in a move you have a balance between bulls and bears. So this balance happened today, so on the 29th of March, and I think that this could be our second wave. So the question we're having is how long the second wave will develop and how low can it go. How low? I can answer this question using fibs. Okay, so you just measure the entire move that you think we are correcting from. So we are correcting from this move. We even went to 34, but the resistance was at 33, just some excess. Okay, and you can see that the 38.2% retracement level is at 25.8. So today I had an order at 26.1. I didn't get it executed, which is once again a very strong sign of bullish sentiment, which means that bulls are ahead of the support level. So this is good to see, even if I miss my trade. So right now we have reached that 38.2% retracement. So this is telling me that maybe we won't see it again, because we technically need to see it at least once for this correction to be considered a correction. We've seen it today. So maybe we won't see it again, maybe. But the most likely scenario is that this correction lasts at least 1/4 or 1/3 of the entire move up. The entire move up started on the 15th of March, and we are the 29th. So it's like 14, it's like 2 weeks, right? So we can expect at least 2 to 3 days at least of consolidation. So I don't think we will go lower than 26. So the most likely scenario from here is that we consolidate a little bit more. Maybe tomorrow we're going to retest the 33, 34 area. We also might retest the 26 support area. And I think that we're going to have 2, maybe 3 candles. So 2 more maybe before moving higher. All right, this is the preferred scenario. Now we also need to monitor what kind of volume we have. For example, here today the volume was very strong, which is not very surprising because we started very bullish and then bears, you know, just rejected the price action. So maybe we would see tomorrow still a high volume, but it should be the lowest as possible. If we have a low volume during a consolidation, it is healthy. If we have a very high volume during a consolidation, it shows that bears are really, you know, trying to take back control, and it's not the best volume dynamics that we are looking for. So let's see what the price action gives us in the next day. But then once again, if this happens on low volume, if we consolidate here, take back some energy, because once again you can see we have an overbought RSI. So an overbought RSI is not that much of a problem. We can see here last time we had an overbought RSI, it was here, guys, and look what followed. All right, here we were overbought in the RSI, and then we had a massive move up. So it's fine, we can of course move strongly higher with an overbought RSI, but look at here, it was overbought and we took back some energy before this strong move up. So here what I was looking for, and I don't think we have it fully, but we have at least something that looks like this. We have the market that is making a little pause. Okay, so I don't know how long it's gonna last. I don't know if you're gonna see 26 again, but the longer this lasts, so ideally 1 week, this would be perfect, the more chances we have to push much higher whenever we break out above 32, 33. So this is what we are looking for. We can't control that, of course, but it would be good to have a little pause in volume and in volatility, something, you know, that just gives us some time to rebuild this energy that we need to push higher. So let's imagine this happens. Then if we have a breakout above 32, 33, the next resistance is 45, but it's not a strong one. The real resistance is the all-time high at 70. So my guess is that if we have this little pause for a couple of days, then we would be in a third wave. Like I said at the beginning of the video, third waves are usually the most impulsive ones, involving the greater volume. As you can see, we have a lot of room, guys, before this volume is really as big as it can be. And to be honest, it can be bigger than that, I'm very sure of this. So let's see. But for now, we are at 25-30% of what we can do in terms of volume, in terms of volatility as well. We can see much bigger move on AMC. So I think we will see this strong and very rich in volume moves in this third wave. So this is and as well, third waves likes to go through some major resistance levels. So that's why I think that if we have this situation with some consolidation first, then a strong move up across 33 with a high volatility, high volume, we would probably break 70. From then, this could happen just like, you know, it's very approximative, but maybe end of April, all right? Then we could have a false wave pullback that could come back to the 70 area, or even maybe a little bit lower. We would need to see how we develop in this potential third wave. Then if we come back here in the fourth wave, we would use Fib projections as usual to find our targets based on 1+3. Today we can't do that. The only thing we can do is what I did live with you guys this morning. I will do it again. We can measure the last move up we had, which is this one, applied to the bottom of this correction that was going to 13 roughly. And this gives us 100. I had 127 this morning. All right, 125, something like that. We can also notice that sometimes the market likes to reach the 2.618, which is 190. So let's say if we go through this 70 level, it is almost guaranteed. There is nothing sure, of course, but almost guaranteed that then we would go to 130. So this would be an easy trade. This is what I'm trying to do, guys. I'm trying to give you easy trades. For now, whenever we move strongly higher like that without making a pause, there is nothing easy. You know, you can try to buy pullbacks on a shorter time frame. This is what I was trying to do live with you. I got one trade at the beginning around 18.7. Then we didn't reach those pullback levels. On GME we did as well, but let's do AMC first. So what I mean is that this second waves and fourth waves is what you guys are looking for to create some safe, because there is always risk, positions to try to you know, maximize your profit during those big waves that we are waiting for, which will be the third wave and the fifth wave. Okay, the first wave is just you know, gives you a glimpse of what can happen in the third and the fifth, but it's very rare that the first wave is the strongest, and what we have just seen is only a first wave, I believe. So of course I can tell you more than that, but I want to make it short. The purpose of this video is to gather all the information in a short period of time. So this is my view. I repeat, guys, I think we enter the second wave that can last between 1 to 5 days, something like that, with support level at 26. If 26 breaks, we have more support at 21. If 21 breaks, it's not looking good. It means that bears got the best of it. I don't think it can happen, but if it happens, it's not looking good. Between 21 and 26, buyers in control. Above 26, bulls are in total control. So it would be better that we don't go below 26 to keep this bullish momentum. Then we expect a strong move across the 70 level, then a pullback close to the 50-60 area, and then a massive move up to the close to the 130 area, and maybe even more. All right, let's do the same thing with GME, guys. I'm gonna be quick because this is roughly the same analysis. The little difference here is that I'm using a regular scale that I don't use on AMC because I prefer the reactions I have on the logarithmic scale. And using the regular scale on GME, you guys have probably seen that with other YouTubers. You guys have probably drawn that yourself. We have a breakout across the 200-day moving average that was at 160 and across the upper band of this triangle. Once again, this triangle is not perfect, guys, because for a triangle to be good quality, you need to have many reactions all the way on the upper band when it's a descending triangle. Here we have 2, maximum 3 reactions. So that triangle is not very, I mean, visible for everybody. This is the reason why I personally, you know, don't really base my analysis on this triangle breakout. I prefer to use the 160 breakout. That was a clear resistance level that has been pierced live, by the way, very easily by bulls, which shows how strong they are. We went through the 200-day moving average, which was not the case for the past 3-4 months. We have the biggest volume trading since March 21, guys, 1 year. So once again, this is very impulsive. This is the beginning of something. This is not a bull trap. We had many bull traps before, so I mean, you can't say for sure it is not a bull trap, but it really doesn't look like a bull trap. And my view is that from here, guys, same as for AMC, we are likely to see a little consolidation at some point taking place, which would be a very nice opportunity to either get some calls once the volatility gets cheaper. I'm gonna of course give you guys all these strategies in my Discord for those who are there with me. For now, I prefer to wait a little bit because it's not the time to buy those calls because the volatility is extremely high. So it's better to buy shares and sell those calls, you know, some covered calls. But right now it's not the time anymore to try to play this kind of strategy because we have all the signals that it is starting. So it's the time to find the right support levels to get you know, decent positions for those who want not financial advice at these levels, and try to once again maximize the profits during this third wave that might come soon. So once again, look at that, guys. We completed 5 waves up on GME in this first impulse. We are in the same situation as for AMC, which is not a surprise. By the way, those two, I was monitoring that during my life. We're trading with a premium. GME was 20% ahead of AMC. Right now, they are again at the same level. So buying AMC, buying GME from here is exactly the same in terms of risk reward. And using those ratios, we can expect GME to develop a little bit the same as AMC. Just for those who are interested, the ratio is roughly 6, so GME should be 6 times bigger than AMC, so 180-30 is a very fair level for both of them. I mean, one compared to the other. So here we can expect 160 as the second wave pullback support, which has been hit today, so same as for AMC. I don't know if we're going to see it again. I don't know if this second wave pullback will last only one day. It is possible, it is unlikely though. The most likely scenario is that it lasts at least 2 more days, so until Friday, and that maybe Friday we have a huge run up. This would make sense to me. The longer this consolidation, the better. Some of you might think that we want to squeeze right now. No, we don't want that. If we do that, it would not be healthy. There would be a massive profit taking that would occur at levels that are not high enough, probably around 250 or maybe 300. To reach those very high levels, we need to have a proper second wave pullback with the RSI coming back, with low volume, with new buyers coming in, with old buyers taking profits, with shorts maybe starting to cover, you know, maybe not. It's better they don't cover right now so that they give us energy. They're going to be the buyers that we would need at 500, 600. It's shorts that would cover. For now, I'm very convinced they didn't start to cover. I might be wrong. I don't know. It's very hard to get this information. We're going to check the public information that we get every fortnight whenever it's available. It's probably going to be next week. For now, the short interest is quite high. Still 20% around of regular short, and the synthetic short is starting to rebuild. But let me show you that quickly, guys. We are still not at the levels. I'm going to show you on AMC quickly. We are still not at the levels we could be whenever we squeeze. So I think that during the second wave pullback, this is when these options are really going to get built. Of course, right now options are hot, are trading a lot, but I think that a lot of investors are waiting a little bit more for, you know, the calm to be restored before increasing their position. So bam, okay, it's coming, give me a sec. Okay, so what I wanted to show you guys is that we had 20 million options on the 145 strike. We have 11 now. Okay, so it's growing. It was 10 yesterday, so 1 million every day. So I think that within 10 days we would have rebuilt totally this potential synthetic short that is created on the upside whenever those strikes are crossed. Bam. So what I wanted to show you, DTC is at 2.9. The maximum synthetic short is at 16% right now. It used to be at 23. So you can see we are roughly at 60% of what we can do in terms of options. So this is another indicator that is telling us that it's hot for shorts, true, but it has been hotter. And once again, if we want to go to these very, very high levels that I'm talking about, guys, for more than a year, and I hope that this time is going to be the good one. I'm very confident in this scenario. So let's see how things develop. But if we want to reach these targets, we would need, once again, every indicator to point towards the same direction. So the short interest, the gamma, and the energy we have in the moves. Okay, so for now we need to take back a little bit of energy. We need to rebuild the option open interest, and we already have quite a lot of gamma, so gamma is fine. We have the breakouts, we have almost everything. We need the breakout on AMC though. That didn't occur to me as I'm using a logarithmic scale. So some of you will tell me, yeah, but on the regular scale it's here. Yes, but I'm using a logarithmic scale and I think it's the right one to use on AMC. Today it gave me good reactions at 32, 33. As you can see, this triangle upper band was acting as resistance. So I know there are other resistances there, but you know, whenever you have a scale that is giving you a confluence of indicators pointing towards the same level, it's usually a level that is touched during the day you see that. So here the 33 level was giving me this triple information: 200-day moving average, triangle upper band, and natural resistance created by the recent highs. So to conclude, guys, I'm going to conclude on GME. What could happen here is same thing, second wave pullback during maybe one more day or maybe one more week. I don't think it can last much longer than that, because usually corrections last half of the motive move that happened before, which was here 2 weeks. So 1 week of correction would make sense. We could also very well push much higher right away, which would not be healthy, but the first wave could very well be extended to 250. In this case, the first support would be 200, then 160. For now, 160 is to me the level to buy. If we go below that until 130, we are still very bullish. Bulls are still in control. Below 130, something bad happened, and we're going to need to reconsider everything. Above 130, we are looking very good, and we are then waiting for this third wave, strong third wave, to go to the 500 area again, guys, like we used to back in Jan 21. Roughly, you know, end of April, same thing, guys. Maybe in a few weeks, I don't know. It can go very quickly. It's hard to say. But once we have this third wave, very impulsive, that goes to this level, we're gonna be able once again to rebuild one more time a bullish position around the fourth wave. So we're gonna have, I think, 2 opportunities in the coming month to create some nice positions and try to maximize profits on the way up. And the target, guys, is 860. So that's it for me. I hope you guys enjoyed this video, and if you did, please don't forget to click on the sub, like and bell button so you're gonna be the first to know when I upload anything new. And stay close to shore. I'll see you guys.